Good morning. You're watching AskBQ, a show where we'll take all your stock market related questions and ask them to our guests. I'm Smriti Chaudhary and with me is Alex Matthew. Let me introduce you to our guests for today. We have with us Mr. Gaurang Shah, Senior Vice President, Geojit Financial Service, and Rajesh Palaviya, Senior VP, Technical and Derivative Research at Axis Securities. Before we begin, I'd like to remind you that you can send in all your questions through any of our social media channels or through the WhatsApp number that's flashing on your screen. You can also send in your questions to the YouTube live chat. Now, before we begin, let's talk about the focus for today. All markets are in red, all the indices are in red, even the broader markets. What cues are you taking from it, Alex?
Well, in fact, that's exactly what I would like to get our experts to comment on. But we've seen now the sixth straight session where we're seeing cuts for the Indian equity markets. And this is, I guess, par for the course based on what we're seeing globally with the turmoil with regard to geopolitics, as well as the elevated bond yields in the US. There is a risk-off sentiment that is pervading. But what does it mean for the Indian equity markets when you have the Nifty 50 that has quite suddenly, quite sharply fallen to levels of 18,850, which is close to the low point of the day today? Let's get the view from both our experts. Gaurang, I'll come to you first. Actually, if we think about it from the top of the Nifty 50 all-time highs, these are drops of what, 6% or thereabouts, 6-7% or thereabouts, not more than that. So no reason to be too worried. But at the same time, what you say is leading to this latest fall, because it's quite a sharp fall in this week itself.
Thank you, Alex. Morning to all of you all, and thank you for having me on this show. So from 20,200 to 18,850 in a very short span of time. This is no surprising to veterans of the market, because we have seen these kind of situations even in the past. Not too long ago, other than the geopolitical situation in the Middle East between Israel and Hamas, talks of neighboring countries wanting to jump into this wildfire. Before this, we had, I think about 2.5 years back, or maybe a little about over that, Russia-Ukraine crisis. Before that, we've had many other such situations geopolitically. We had pandemic not too long ago. But we've managed to overcome all of those levels and all of those uncertain times. And we did manage to make an all-time high. I'm talking about the Indian equity markets, Alex. So I guess the worry for the market right now is what will happen with respect to geopolitical situation, whether the neighboring countries in and around Israel would want to jump into this particular situation, which may lead to crude oil prices even moving higher, though they have cooled off post the report of US stockpiles. But this is an uncertain time, and unfortunate thing is you cannot have any kind of prediction or any kind of a view unless and until the situation evolves and we get the news out of it. So we react on news as and when it is known to us. Along with that, US bond situation is also something which can be credited with the kind of sell-off that we have seen, especially with the selling number for the month of October, if you go to see from the FIs, have been on the higher side. But the good news, Alex, is that the domestic institutions have been able to absorb all that selling. Otherwise, we would have been much, much lower from where we are right now. So, and of course, uncertainty in terms of 5 state elections by the time we end this year, next year, a big election. A lot of domestic and local and global events which are possibly keeping the markets under the weather. But let me say this, Alex. If you're not looking at the immediate short to medium term, and if you are long-term time horizon, then I think this is the time wherein you should, open up your shopping list, but don't go all out. In a phased out manner, you can definitely start investing from a long-term point of view. Q2 earnings, Alex, whatever we've seen up till now, I guess there is no big disappointment, and whatever remains to be seen, I hope there is no disappointment over there.
Okay, we will talk about one company that has perhaps disappointed just a little bit on the earnings front, and it is also because of the sentiment that is pervading, getting a little bit of a drubbing in trade today. But before we do that, Rajesh, I'll come to you on the technical levels. If I'm not mistaken, around 18,600 is the 200-day moving average, right? Or thereabouts for the Nifty 50. We're not too far away from that. At what level do you see support, at least in the near term?
Yeah, morning. So looking at the supply pressure, I think we may test 200-day moving average for Nifty. That is just 200 point away from the current level. So I think this, as we are today at expiry days, so I think there is no as such stoppage at this moment. Even the short covering is not visible. The short rollover activity is taking place. So I think follow-up selling we can see, and we may test 200-day moving average in the continuation of this down move for Nifty. For Bank Nifty, we have already broken 200-day moving average, and we are almost trading 400 point below to that level. So I think Bank Nifty is looking further more weak from the current level, as the most of the banking stocks are also witnessing the same kind of supply pressure. So I think Bank Nifty may drag further lower from the current level. And for Nifty, next major support is 18,650, and the major resistance in pullback would be at around 19,000 and 19,200. So I think the comfort for market will return back once the Nifty again manages to regain above 19,200. Till these levels are not regained by the Nifty, I think the seller will be on upper hand, and whatever minor pullback will come, the selling pressure is likely to be there in the system.
All right, let's shift our focus to a stock, a company that came out with its results last night, which is Jubilant Foodworks. Now, we saw a weak quarter, maybe due to tough macro, and even the demand environment has been slow. It may be due to the long elongated religious period, which might have led to a slowdown in the demand. Looking at the revenue grew only 5% year on year, with operating profit falling 10%, margin contracting 20% versus 24% in the last quarter of the last year. Net profit fell 40%. Let's take a view on what you should do with this stock. Is it a good time to add it to the portfolio? And if you already have it, should you continue holding it? Gaurang, let's look at the long-term view first.
Well, so, difficult times in the market has its, chain reaction on all the sectors and most of the stocks. First, a disclosure, since we are talking about the stock, we have fundamental coverage on Jubilant Foodworks on the buy side. We remain positive on the stock from a long-term point of view. What we've seen over the period of time is that, QSR segment, especially names like Jubilant Foodworks or likewise other names, they have the great flexibility in terms of passing on the food inflation related price hikes or input cost going up to the end consumers like you and me. And as far as India is concerned, 35% of the total population is below the age of 30, young population that we talk about. And there is a huge demand side push that is likely to come through from that end of the population. Unfortunately, out of 4 quarters in a financial year, there are times wherein 1 or 2 quarters may be a little bit disappointing because of various reasons. But the good part is that, the traction is definitely there. And this particular company, Jubilant Foodworks, that is Domino's Pizza, I think it very recently cut the prices of its large size order pizza that we used to earlier order to compete with the unorganized sector pizza makers or suppliers. So we remain optimistic and hope that these pressure as far as margins and profit margins are concerned, or input cost is concerned, or the competition is concerned, will be a thing of the past. It has got one of the strongest franchises, not only in India, but across the neighboring countries in India.
Interesting. All right.
What are the cues on the charts, Rajesh, for Jubilant Foodworks?
So today there is a gap down, and now stock is almost trading near to its 100-day moving average, which is at around 500 level. So if at all stock slips below to 500, then possibly it may go further down towards 480 level. Stock has given a breakdown to almost its 4-5 week consolidation range. And looking at the breakdown, it clearly shows that there could be further more follow-up selling we can see in coming trading session. until the stock not crosses above 525, 530 zone. So that's the major challenging level on the higher side for Jubilant Food. View is negative. We expect that furthermore selling pressure towards 480 can be there in the stock in coming trading session.
Okay. We've got a couple of questions already in. I'd like to remind our viewers who are tuning in on our various social media platforms to please send us your queries on either the chat there, or you can send it to the WhatsApp number, which should be flashing at the bottom of your screen right now. We've got a question from Rashida. I'm not sure, Gaurang, if you have a view on this, because it's a tiny company in terms of market capitalization, less than 1,500 crore. This is Deccan Gold Mines. Now, it's been listed for quite a while, and it's had quite the gains over the last year or so. Do you have any view?
No, unfortunately, no view, Alex. Can't comment on this.
Okay, fair enough. Rajesh, can you tell us anything based on what you're seeing on the charts? Because she has bought long time back, she says, at levels of 40 or thereabouts, or 45 or thereabouts, and the stock is currently at 112.5, though it is at a lower circuit today.
So we are not actively tracking this stock, but looking at the chart, stock has run up quite well in last couple of months, and I think she should book profit as she has already bought at very lower level. And looking at the market condition, and the mid cap, small caps are in now a deep corrective mode. So I think she should book profit, and I think she in this kind of market, I think these kind of stocks may correct further. So the profit can be booked at this level.
All right. Next up, we have a question from Sonu, and he's asking about Barbecue Nation and Ethos Limited, and he wants to buy it for the long term. Gaurang, are you covering these, Barbecue Nation and Ethos, and what are the fundamentals showing on both of these stocks?
So presently, we don't have coverage on either of them, but Barbecue Nation is also a similar story to what we discussed, Jubilant Foodworks. A specialty restaurant chain. We had a coverage during the IPO, if I recollect, and we had a subscribed recommendation over there. Let me say this over here, that in this kind of a market, when anything and everything is just dropping off the cliff, it will be difficult for short-term, medium-term kind of pullbacks. And even if those pullbacks could be witnessed, it may be very, very short-lived. But if you're a long-term investor, then my sense is that if you're holding fundamentally strong companies in your portfolio, you should continue to hold them. If there is an opportunity and if you have the liberty of investing more, you can possibly, in a phased out manner, add to those fundamentally strong companies. No specific comments on these two because we don't have coverage.
Actually, if you're talking about Ethos, then as I understand it, it's a watch selling company, right? So if you look at not necessarily a like-to-like, because we're talking about Titan, which operates in so many different categories. It has jewelry as well, but I guess its original claim to fame was watches. Would you say that it's a good opportunity to look at Titan right now, Gaurang, on the fundamentals?
Well, again, we have coverage on Titan. We've been positive on this company for a very long period of time. And gold almost nearing 61,000 to 10 grams, Alex. With festive season lined up, my sense is that sales and contribution from this particular gems and jewelry segment for Titan is going to be very, very strong. Along with that, historically, Titan is known for wristwatches, and that segment also they're doing pretty well. Eye care business is doing also quite well. Backpack and accessories, again, looking quite strong. So if I have to look at this particular sector, then Titan company would be the stock that I would pick.
All right. Rajesh, Barbecue Nation and Ethos, what are the charts showing, and at what levels should you consider buying these two stocks?
So Ethos is in a clear uptrend. Yes, some profit taking is happening in the stock. In the current month, almost stock is down by 10%. But if we analyze the overall long-term structure, it's in bullish territory. Stock is holding above all its long-term moving averages. Now stock is trading near to its 100-day moving average. That's a good level. Again, those who wants to buy the stock for a short-term positional basis, for 1,500 is the important level on the downside. So one can buy in this decline towards 1,500. Keep your stop loss at around 14 1660. And again, on the higher side, once the stock crosses above 1640, 1650, it may again resume its uptrend, and possibly we may see furthermore higher level on the towards 1800 kind of zone. Overall structure is looking bullish for ethos on the long term to short term basis, so one can buy and accumulate. But barbecue nation is looking weak. We have seen supply pressure in last couple of week. This is the third consecutive week where stock is forming lower high low formation. That shows sustained selling pressure, and now stock is approaching towards its previous swing low. I believe that if it stock breaks below 630 level, then possibly we can see further more downside towards 610, even 600 level in the continuation of its down move. So I think one should avoid the barbecue nation at this level. Stock is looking weak across all time frame.
Okay. So I believe there's a question on IRM Energy, which is listed today. And this is an issue IPO that got quite a decent subscription during its IPO phase of 27 times the amount of shares that were on offer. This is a question coming in from Anil Dahifale. It's, can you suggest if I should invest in the IPO? IPO is over, but you can invest in the secondary market. Hopefully, Gaurang has a view based on what he's read. What's the view, Gaurang?
Well, so we had come out with the IPO note, Alex, on this particular company, and we had a subscribe recommendation from a long-term point of view. Since the IPO has got listed today, I believe there might be euphoria and excitement. Let the dust settle down, and if you get it at lower levels, you can definitely invest from a long-term point of view.
Down, actually, it listed at a discount. So from that perspective, would you suggest?
You can definitely go out and invest.
Okay. Okay, so too early, of course, to get a view on the charts. So let's move to the next question. I believe we have a few.
Yes, the next one we have on Dixon Technologies, and this question is from Sanket Patel. Now, the results are supposed to come out today, but looking at the previous quarters, Gaurang, what's the view on the fundamentals for Dixon Tech?
Well, this company is in a sector which does not have a lot of competitors, maybe from unorganized sector, one or two of them, but has established itself in terms of business quite well, very strong. The commentary from the management as far as first quarter earnings were concerned, business outlook was very, very strong. Numbers are coming out today, so I would not be saying too much, but yes, it has got a very strong balance sheet, and the management is equally strong as to where they want to take their business. I hope numbers should have a good story to tell us in terms of growth outlook.
Okay. Gaurang, interesting question ahead of the festive season and in fact the wedding season, right? Which is going to be quite the season this time, I'm told. That there are a lot of Muhurat days. Again, I'm told that this happens every few years and that gets marked as the best ever, the biggest ever wedding season. But anyway, the question is about Vedant Fashions, and this is again by Sonu, asking whether it is possible for this company or this stock to compound at 20% over 5 years.
And so Vedant Fashions, again, about the wedding season, I'm already hearing drum beats in the evening and fireworks going off. And this is going to go on till early next year.
Are you sure that's not because of the World Cup, Gaurang?
No, it's not because of the World Cup. Because those matches, I don't think people would want to go and drum it out, yeah, right?
Fair enough.
If it was India, Pakistan, it's a different equation. Or maybe India playing some other team. But coming back to the question, I think retail fashions, we have a couple of coverages over here. One of them is a name which has been in the news as far as acquisitions are concerned, and the name is Aditya Birla Fashions Limited. This company, and very recently, I think they acquired one more larger name to get it under his belt. A couple of months back, they had acquired one more company, and they've got very strong, powerful brands in terms of offerings for retailers. Along with that, we have another retail company is Shoppers Stop. Our sense is that you can possibly choose from either of this. If I have to choose one name, then I will go with Aditya Birla Fashions. given the kind of scope of business that they can do with the kind of acquisitions that they have done, Alex.
All right. Next up, we're talking about Surya Roshni stock. The question is from Naresh Thakur. He wants to know the medium-term view. He has bought 100 shares at 546 per share. The share is currently around 529 in the green today. Rajesh, what's the view on the charts?
I think he should hold on. Looking at the overall structure, it seems to be on the bullish side. Only series of higher top, higher bottom formation on there on the daily chart. Looking at the longer term time frame, we believe that if stocks continues to hold above 510 level, then possibly there is a potential again to move further higher towards 565, 570 on the higher side. So I think he should hold on the position with stop loss of 510. Possible target in the near term is 570, and if he continues for furthermore for longer period, I think this stock can move further higher towards 600 plus kind of level also.
Okay. Interesting question. I guess kind of a quick answer is possible on this one, Gaurang, because we've got 4 or 5 that I'd like to take right now. They've all come in a flurry. Nilesh Patil is asking about 3 IT stocks to invest in that have a good risk-reward ratio. And these are frontline companies that have been under pressure. TechM yesterday posting a bit of a disappointment in results. But would you say that this is an opportunity to pick up for the long term? And which 3 would you suggest?
TCS, KPIT Tech, LTIMindtree.
And why these 3 and not Infi?
Well, Infi has been under the weather in terms of numbers. And as far as TCS is concerned, the commentary is quite strong. There is a tailwind of buyback also, but that is immaterial to me, Alex. KPIT Tech because of the kind of business model they have, and LTIMindtree in terms of opportunity post the merger.
All right. Next up, we have a question from Kashyap, and they want to know the view on APAR Industries, and this is for the long term. So, Gaurang, what's the view on APAR?
Well, I won't be in a position to give a buy-sell hold recommendation, but let me say this for the benefit of your viewers, stroke investor, that it's one of the strongest performers in terms of its sector. In terms of earnings, it has got a very strong earnings and visibility of growth expanding going forward from here on. And the demand for the products that APAR industry manufactures is going to stay here for a pretty long period of time.
All right. Rajesh, the stock is down about 5% today. Is it a good time to add to the portfolio, APAR Industries?
So long-term structure is bullish. Month on month, if we analyze the monthly chart, stock is showing a clear uptrend. And yes, some profit taking is happening. And now stocks below the 50-day moving average. Possibly if stock comes near to 500, 4,400, that's again a good level again to re-enter in the stock in the corrective move. So I think we'll wait 4,500 kind of level to re-enter, and stop loss at this on the downside should be around 4,350. On the high side, once the stock crosses above 5,000 mark, then possibly we can see a level of 5,500 to 5,700 kind of target on the higher side. So buy on dips is the strategy. Wait for further more corrective move and then add for investment.
Okay. Sonu is asking a question that I think everyone will benefit from the answer of, and he's asking how often we are live with a show like this. Sonu, the answer is every day at 11:30, every market day, I should stipulate, at 11:30 a.m. And our guests will join us every day to give you answers like this. One last question and we will end for the day, gentlemen. And this one is on the real estate space. It's on Prestige Estates. We've got Deb Sudipta, who's bought at levels of 443 Prestige Estates. His time horizon is 3 years. Should he add more is a question, Gaurang?
So this sector is looking quite promising, first of all. Secondly, in Mumbai, because of the festive season, the run rate in terms of new registration has again made a new record. We had coverage on Prestige Estates some time back. Unfortunately, I don't recollect currently whether we have the coverage, but it's a south-based, basically Bangalore-based real estate developer who is planning to spread the tentacles into major geographies in India. Will end up benefiting out of these, expansion plans that they have. Unfortunately, I don't recollect, Alex, the coverage is there or not, right?
Okay, let me quickly get a view on the technicals as well, Rajesh. Prestige Estates?
very strong setup in this real estate space. Prestige is outperforming, and looking at the overall structure, I believe that this stock may continue furthermore outperformance, and possibly if you get any opportunity to buy the stock and decline towards 680, 690 zone, that's the good area again to re-enter in the stock in corrective move. Overall, we believe that once the stock again crosses above 780 mark, the next target for stock can be around 850 to 870.
All right, that's all the time we have for today. Thank you, Rajesh and Gaurang, for taking so many questions. It was a pleasure having you on the show. And viewers, thank you for tuning in. We'll be back tomorrow, same time, 11:30 a.m. Until then, stay tuned to BQ Prime.